Good evening, ladies and gentlemen. Thank you so much for sort of continuing to be here. I know that we've got now, it's a 30-minute panel discussion, and after that, enough to be service in a set. So, it's going to be a great conversation. We've got Shivam and Edward here. So, the topic for the conversation is we're going to be discussing a bunch of interesting things about DeFi Zen, right? I'm sure most of you here have in one way or another, either in the earlier cycle or even now, you might have heard of DeFi or you might have participated in DeFi, right? So I'm pretty sure it's going to be a very relatable and a very informative session going forward. Before we get started, a quick round of introductions. Probably Shivam, we can start with you.
Thanks, Ani, and thanks, Nate, for inviting me here. So I am Shivam. So I have around 13 years of tech experience and around 4 years of DeFi experience.
I'm Edward. I'm the founder of AI Exchange, which is a centralized and decentralized exchange aggregator. We aggregate like 16 block exchanges and allow you to deposit, trade, and withdraw to the best platform in one. We're kind of like the centralized and decentralized version of one.
All right. So without much ado, let's get right into the topic. And I think I'm going to open a can of worms, especially when it comes to DeFi. And the first question for you is, what are your thoughts on the current regulatory landscape, right? Especially the kind of challenges people face when you're building in DeFi from the regulations or the compliance point of view. What are your thoughts regarding it? And what do you think is the kind of progress we are probably making in this space? And what I think we'll start with you.
Sure. So there's no doubt that regulation is important for trust. But there are also other issues that come with it. And one of those I'm going to talk about specifically is the classification of tokens. And what I mean by that is utility tokens and security tokens. So with my exchange industry, we had an idea that we actually wanted to reward our users in USDT for investing in the platform. So much like shares, you'd be able to hold a percentage of the platform through the tokens. So if you own 10% of the tokens, you'll be entitled to 10% of the rewards we get. But this actually makes it classified as a security token, because around the world they adopt a US standard called the Howard net. And one of those factors in that is there is expectation of profit with your token. And if there is, then it can be classified as a security token. And I don't necessarily agree with this. And this has made it really difficult for me, for example, to launch my token around the world. And what other exchanges do is they reward users back in their own token. But what actually this does, in my opinion, is it makes it more risky as an investment. So rather than rewarding users with fiat-backed currencies, they reward them with something far more volatile and far more likely to lose out on. So I think there are advantages and disadvantages with regulations, but in my experience, this has been a very difficult one, and the classifications of tokens as securities or utilities.
Cool. So I would like to give a different perspective of the same compliance thing. So as you guys know, like we are in DeFi world. So first of all, DeFi is like decentralized. No one has a control over it. But then comes the regulations. But I believe regulation needs to be there at certain point in time, because a lot of hacks are happening. And if you want crypto to go big in future, then compliance and regulation needs to be there, because until regulations are not there, big investors are not going to come. I'm talking about like funds which have like billions of dollars of money sitting with them, just waiting for regulations to enter crypto. Second thing is like in DeFi, a lot of hacks are happening nowadays. So the thing is, until there is a regulatory authority handling it, there are going to be hacks. So I met a lot of people in ETH India itself who are working on compliances itself. So 1inch is one of them. So 1inch tracks a lot of data about you as soon as you land on their website. They track your IP addresses, they track your wallets, they check like, have you interacted with any of the mixers? Have you interacted with Tornado Cash kind of mixers in the past? And based on that, they allow you to do the transactions. So if, as you guys know, like smart contracts are immutable. Once deployed, you cannot change it. But these protocols are trying to handle these things at the front-end level so that they can be compliant with all the regulations and they don't get into any trouble in future. So they are trying to improve the ecosystem so that more and more people can enter the ecosystem and the ecosystem can grow. So that's my take on compliance.
So, Shivam, I think if all of us agree the builders, be it us who are building in the space, all of us agree that, it's only with compliance and regulation sets in that, Web3 is going to go big, but I would say mainstream, more mainstream than it already is. But my question here is, when you're building in Web3, right, you're not just building it for, say, one country. You're not just building it for India, or you're not just building it for Europe, right? You've got users from across the world. You've got, cases in countries in Africa that do not really have access to the world's financial system, who are now able to participate in some limited form or the other because you have something like a decentralized economy powering it, right? So my question is that when you are building your products, and you've got multiple geographies that are probably part of your target audiences, I'm sure that it must make compliances and regulations that much more tricky, right? So what are your thoughts on the kind of challenges probably people would face in this kind of a scenario? And probably in case you got some thoughts as also, how would you address them? How would you go about addressing something like that?
Sure. So that's a good question. So like I was giving an example of 1inch. So they do track like from which geography you are coming to the website. So based on that, they might block you also if your country doesn't support crypto. And a lot of other websites are also doing that. I get blocked on a lot of websites. They like, we are not available in your country. And as of now, we don't have any kind, and so at these app, we don't have any kind of these things. But going forward, if you are becoming big, like other protocol, Aave, Compound, 1inch are, then you have to apply all these compliances into place. That avoids a lot of trouble for the protocol itself in future. And the thing is, like, we call it decentralized, and DeFi itself is like decentralized finance. But at the core of everything is kind of centralized also. Only the smart contracts are decentralized. The front end is centralized. It's hosted on some hosting provider. The backend is centralized. Of course, IPFS is there, but at the end of the day, a lot of things are centralized and are controlled by these entities. So yeah, I believe we have to track the user from where they are coming. We have to see what are the compliances of that country, and we have to adhere to those compliances.
And what, any thoughts?
Yeah, I mean, it is incredibly difficult, especially for seeing companies now, especially with the European regulations coming out. And I think what we're finding actually is companies are actually incorporating in tax havens like Belize, Spain Islands, countries like this, and they're not actually getting regulated until they get big. We used to put out on 1inch, and yeah, it does need to change.
So I think, Sure, you raised a great point in the earlier, in terms of saying that it's not truly decentralized yet, right? For even the most decentralized protocols are not completely decentralized because there's still centralized elements like servers, the hosting, your front end, which is, there are people working on decentralizing different aspects of this, but apart from the smart contracts and the on-chain stuff, I think there's not much that is currently decentralized. So probably this question would pertain to more on that aspect, the security aspect, right? So what do you think is the importance, especially when you're building DeFi products, of getting your smart contracts audited, right? And also the kind of infrastructure that you're incorporating into building a product around your contracts and around your offering itself. How would you go about it? What are your thoughts on that? Probably, Shiva, we'll start with you, and then Edward, I also want your thoughts on that.
Sure. So as you are talking about audits, so I will come to audits later on. So the very first security aspect starts when you write the first line of smart contract code. So I've been writing smart contract code since last 4 or 5 years now. So the very first thing is you have to test the contracts yourself. And I'm not talking about manual test. You have to write automation test so that each and every line of your code is tested. So the thing is, like, in our contracts, we have a test coverage of 99% plus. So each and every line of our code is test covered. Then our QA tests the code base, manual. Then it comes manual. And then it goes to the auditor. So, like, in my career, I have maybe 20 plus contracts I have audited. I have audited and I have got audited also. So the thing is, like, most of the time auditors are not able to find stuff in our contracts because we have ourselves automation testing we have done for our contracts. So that is first thing. Second thing is, of course, audits are important. First thing is, even if you miss something, auditors are thinking from a different perspective. You might have a bias about your code, but they won't have. And last but not least, they have the right tool set to test your contracts. But nowadays, even audited contracts are getting hacked. KyberSwap was like the latest example. And we in the Solidity community, we are calling him like the godfather hacker because the kind of hack he has done, that was kind of next to impossible. That is one thing. But there the auditors come into picture. I believe even one audit is not enough nowadays. So first you should get your contracts audited. Then you should get it audited, community audited. So like currently we are dealing with Quill Hash, and they are doing community audit for us. So I believe you need at least 2 levels of audits nowadays.
Yeah, I think smart contract auditing was important. I'm actually Decentralized exchange, so we haven't actually had any auditing. But it definitely doesn't guarantee your system is safe and secure. I like what you said with KineSwap. And it's also important to know the benefits to the auditor and the benefits to the hacker as well. So you'd be paying, say, $50,000, maybe less, maybe more, to an auditor, whereas the benefit for someone that would actually hack into it could be $50, $60 million. And that incentive makes it so much more incentivized to actually be able to break into a system. So I don't necessarily think that an audit is it needs to be all your system is secure. It's definitely more of a peace of mind sort of thing, and it can find out some more issues. But it's the way that you code something from its face that that helps with the security and not then.
So I would like to add a few points to that. So first thing is like why smart contract audits are expensive. So main reason, like you said, the contracts are holding a lot of money. Yeah. So we used to do that kind of reviews for free for the PRs our colleagues used to raise. But as smart contracts are holding a lot of money, that's why the auditors are charging. Second thing, another thing which a protocol can do for the security of their protocol is they can come up with bounty programs. So that is something which can help. So white hat hackers can come, find bugs, report it, the protocol can fix it and give them bounty. So that is another way to come up with the issues with your smart contracts.
Do you worry that if sometimes a big enough bug bounty, rather than report it, they may actually utilize the hack and steal money?
That a hacker can do any day, anyways, if they are able to find an issue. So I'm talking about bounties from white hackers' perspective.
And I think it's a great point in terms of a hacker can, if they find a bug, then they can either exploit it or they can report it, right? So I think in the end, one of the things that forces probably, this is my thought of this, that probably, would get somebody to report it rather than exploit it, is you also get a lot of good reputation, which is associated with you finding a bug, and reporting it, and delivering back you to one of the, any entity in the Web3 ecosystem. I mean, the need for all Web3s to work together. It is the possibility. Right? You all work together so that you can share. And that's the real point. So, I think on that note, I would also like to sort of understand a little better. Compared to, say, 2019, 2020, and even 2021, you would be at the winner, a host of disasters that have struck us. We have gotten better. We have better audits. We have better security practices in place. Right? We have, as I said, our programs. We have a lot of different ways in which we are trying to cover our bases. So my question here, I think Edward, you'll be able to also comment on this a lot better, is within Web3, you will just have folks who are decentralized players. We have centralized players as well, which are interacting with on-chain assets and folks participating in the Web3 ecosystem in a free manner. So how would you suggest, for let's say somebody using a decentralized product, it's very simple. You need to get your smart contracts audited. As Shazam was mentioned, probably it's 2 layers of what is a good practice to have. What would your approach to security given that a centralized sphere in the decentralized space?
I think just sets. And regarding bulk balances as well, for our exchange, we do offer a bulk balance program. But what we found is far more people actually try to hack into our system than they do actually try to utilize those bulk balances. So we're seeing, like people trying to inject SDR nearly every single day, whereas I only sort of receive a small email regarding bulk balances maybe every other week, which is pretty interesting actually. So I think it's got to look from the company itself. Hiring an in-house team or an external company, just to test the system really thoroughly to ensure that there's no vulnerabilities. And I think it's also important noting as well is, you mentioned the time and how things are changing. And I think AI is actually going to play a really, really big impact into smart contracts auditing and auditing in general in the future. I don't think it's quite there yet because it can't be analysed that much code. But in the future, this sort of technology is going to be able to really pinpoint where exactly there may be vulnerability. And I think it's going to sort of lower the entry barrier to get this auditing as well. Which is sort of a really interesting part of it.
Makes sense. Thank you. So I think that sets the up pretty well for the next topic that I want to discuss is DeFi. Initially, when it started, was limited by the ecosystem we were in, and by ecosystem, I mean either the chain you were and back then, it was me once, now it was an entities. It were rollouts, someone you've got optimistic rollouts, the PK rollouts. There were so many different ecosystems. You've got the EVM ecosystem, you've got the Rust ecosystem, and Solana, you've got the Cosmos ecosystem. So you've got so many different ecosystems which have blossomed and they have flourished with this whole sort of ecosystem with developers, participants in that whole space. So I think more and more this has meant that there are people who you might be limited to, who might be beyond the chain that you're currently active on. And therefore, that has thrown a very huge spotlight on making apps and protocols cross-chain, right? And this, I believe, is one of the cornerstones for DeFi to actually explore a second time and want more folks. So I want to know your thoughts on essentially where does cross-chain lease fit into the DeFi space?
Yeah, so that's an interesting question, and that's one of the problems we are working on, but I will come to that. So like you said, I would like to point out the progress of how this ecosystem progressed. So firstly, it was a single ecosystem that was Ethereum. Then kind of BSC and few other folks came in and forked, and then few other chains. But then there were protocols. Firstly, it was Ethereum, then there were multi-chain protocols. So a single dApp supporting multiple chains. Then came the cross-chain things. So we are trying to solve the cross-chain problem here. So at these app, we are trying to build a meta aggregator of DEXs as well as cross-chain bridges. So most of the times bridges came into the picture and they solved this cross-chain problem. So they lock the liquidity at one chain, they unlock the liquidity at the other chain. That's the whole concept of bridges. But then came the cross-chain aggregators. Like DeFi and Socket. They aggregated all the bridges, they gives you the best price. Now at these apps, we are aggregating over cross-chain bridges, cross-chain aggregators like DeFi and Socket. So 95% of the times they give you the same output. We are trying to target that 5% so that the user can get the best output while doing the cross-chain swap. But these are just core layer we are working on. But like you said, cross-chain, we are trying to make the process so smooth for the user that user won't even get to know on which chain they are and what transaction they are doing. Whatever they want, it's kind of like intent, but I'm not getting the core of blockchain intents. It's like what user wants to do, and we will make that happen. And I think that is a similar problem you guys are solving using account abstraction. So we are moving towards similar way using smart contracts.
Yeah. So I think it's extremely important. Because I think before there was this sort of concession that you either invest in Ethereum or you invest in Solana. Ethereum's the other team, but actually the technology system because so just for example, with Solana you can sign transactions from any different wallet, just with one private key. The fee spender's private key, and this is something you just can't do with Ethereum, for example, the sender needs to pay the fee to send the funds. So it is very important because it opens a whole new aspect of development art if it's just still things that you do. And yeah, I'm just very excited for the future once it gets better and there are more decentralized cross-chain sources.
So cross-chain or sort of interoperability between blockchains is already quite complex, right? It is not easy to sort of, especially, I should have pointed out, taxes and bridges are essentially what make a blockchain work, especially because they're in water transfer value. And bridges most of because they are sort of the foundation on which blockchains communicate with each other, especially in terms of value, right? And it's also one of the biggest vulnerabilities that have been exploited in the past few years as well. So I think one of the things that also probably needs to be solved for is how can you make this easy? Develop the kind of tabs that are easy to use while those vulnerabilities are taken away from the front end or from the end user itself is going to be more and more important, right? So I just want to sort of touch upon this topic of account abstraction, give you a context of the chain on the sort of interoperability between chains. We from just kind of transfer value that would happen in DeFi. How is it that apps still claim, cross-chain apps that are more secure, but can also work across different chains without that too much friction between the fact that the Optimus is our point. Right? So showing this out of you.
Sure. So like you said, like you guys are doing the same thing, right? So I would like to ask you what kind of bridges you are using for the cross-chain transfer.
So we work with SFP and SCK, and in the backend we have a few DEXs and a few bridges which are integrated. But you also work with partners like DeFi, as you mentioned, who's a switch elevator. We work with one and the next side hacking, and that's also made a way to our hustlers.
Sure. So that's about it. So like you said, you are using LiFi. LiFi is a bridge aggregator, first of all. LiFi might give you a result based on the best output, but the best output might be Stargate. Stargate takes up to 20 minutes for the cross-chain transaction. So the thing is, like, there are more than 100 bridges in the market right now, and there are only few of them which are able to solve the core problem, that is the time taken for a cross-chain bridge or cross-chain token asset bridging. So most of the bridges take like 4 to 5 minutes, but few are taking few seconds. And we as a team have worked on bridges in the past. You don't need to take 5 minutes, 20 minutes for a cross-chain bridge. As a technology, as a Solidity and front-end interactions, you can create your own optimized layers. You can observe to the events, and you can just unlock as soon as you get the event. So I believe that layer needs to improve to be a real omni-chain dApp. So that needs to be cracked, and that is still a pain point. I believe more protocols will solve that in future.
And in fact, question you as well, especially when it comes to onboarding users, right? Centralized exchanges have always been a huge part in that, right? You had Binance, you had in fact the Indian origins with EX, which was super critical in the bull run that happened, which onboarded users into F3s. My funds are off up with EX as well, but goes to security, right? So centralized exchanges essentially play a huge role. In fact, my journey when I started off with Web3 was I started investigating through a centralized exchange, and that's when I started having the courage to even interact with decentralized products. And that's when I started interacting with the protocols, the DEXs, and so on and so forth. So the point that I'm trying to make here is centralized exchanges is a huge part, but essentially centralized entities that interact with the Web3 space, and more so important in DeFi, because you're onboarding more people in something that's super financially so valuable. Right? So I want to, this is open questions for both of you. How is it that we can start getting more and more people comfortable with DeFi? Right? How is it that we onboard more users? And do you have any sort of tips or any suggestions for the kind of products that should ideally build out to sort of further bolster participation within DeFi?
Do you use new users from the outset going directly to Decentralized? There's quite a bit of trust in Decentralized exchanges, and I know there shouldn't be, because there should always be more trust in Decentralized exchanges, because you're not relying on anyone But it is what's known. People know what finance is. And I imagine if you say to a brand new user what's useful, they may not actually know, even know how big it actually is. And there's also the aspect of trading instantly as well. And that's something you can do on centralized exchanges, and it's not something you can do on decentralized exchanges. And it's currently known, when you go on a stop exchange, centralized exchanges are a lot more familiar. It's a lot more understandable for those people who trade, to traditional finance instruments. So I don't actually necessarily think there's an issue. I don't see why people need to go directly to decentralized exchanges. And on the other hand, it's not just advantageous to users as well, but reporting. It's also for social projects as well. So any projects that initially launched or are looking to increase their market cap or volume, they often actually launch on centralized exchanges first. And it's extremely difficult to maintain liquidity on a decentralized exchange as a very small token. So what you see then is more of these small tokens come centralized exchanges to launch. And one of the key things about that is on decentralized exchanges, anyone can list token. They could be honeypots, they could be scams. And in that state, there is more trust in the decentralized exchanges because every single token that's listed on Binance, KuCoin, Coinbase, Bitfinex, you name it, has had some sort of audit happen. For example, I was speaking to one of my friends the other day. It said they started investing through Uniswap, where they saw advert out there on their Twitter, and it was a honeypot, so they can only buy and not sell. And this sort of issue, you'll never have on a centralized exchange. And while I would say decentralized exchanges probably more than centralized exchanges, I think it's actually pretty good that people use centralized exchanges first. And at the end of the day, when they get to deposit money via money, that's a centralized process anyway. So it's not like they can remove the whole onboarding process anyway. So yeah, that's number one.
Yeah, so I think Edward has covered it in a good way. So one point that he has covered is like either you have to enter crypto or exit crypto. You have to do it through a centralized exchange first of all. So I think he has covered most of the points. Few points which I would like to add is it's still a far-fetched dream to see more users into DeFi. Main reason is the onboarding. I'm not talking about centralized or decentralized. The tooling needs to be improved. Like you guys are working on AA. MetaMask is not that user-friendly. And the thing is like you lose your keys, you lose everything. So I was just discussing with one of my friends today and we were discussing about RWAs. And we were discussing like you might have your house deed in an NFT. But what if your account privately gets stolen? Your house is gone. So a lot of things like social logins, a lot of these things will make the onboarding process way easier for the user. But where it goes against centralized is the KYC part. Most of the crypto native, I won't say retail who is entering right now, but people who are into crypto since last few years, they usually avoid centralized exchange. And the main reason is KYC. And like we were discussing compliance and regulations, government is getting serious. They are targeting these people. They get to know how much they are earning. And that is one of the reasons most of the people don't even touch centralized exchanges and they prefer to stay on decentralized exchanges. Another thing is, if you leave about crypto, I was talking to one of my gym friends and we were talking about stocks and he was like, it's gamble. And when you talk about crypto and a lot of YouTubers, people consider it as a taboo also. So it will take time to overcome all these things. Leave out crypto, like people consider stocks as gambling, so it will take few years, but by that time the opportunity would have been gone. Yeah.
Do you clarify what we mean when you say that KYC not? Because what you just like to say it as well, presumably you're going to have to do KYC in order to get money into what it first says. So in what ways are you going to avoid the KYC?
Yeah, so the thing is, we are talking about retail here. So if retail comes, they will come through centralized exchange. They would like their funds to be stored on centralized exchange. They don't want to take care of their private keys. But I'm talking about crypto native or crypto degens who are already into the ecosystem since last few years. They are not bothered about onboarding any new money through centralized exchange. They are not bothered about exiting new money through centralized exchange. I'm talking about those people.
Okay, so they've got previous money, you would say.
Yes, and they don't want to come into the government regulations and they don't want to come under the scanner. So that's why they don't touch even centralized exchanges.
So I think the key takeaway for me here, especially when you're discussing a specific point, is centralized servers to a great extent will still be a significant part of the ecosystem. They might not be an decentralized, right? But they're going to be important to facilitate the transition of anybody who is not part of the ecosystem to get into the ecosystem. Like everyone said, centralized exchanges are usually, in fact, the majority of Web3 participants have come from somebody who's been into a centralized exchange first in one way or another, and then sort of participated in the ecosystem. And, as you discussed in on-ramps and off-ramps, especially getting, any sort of money into your wallet, any sort of funds into your wallet, will still, include centralized shares before you're able to be truly a part of the decentralized one, right? I think that's my takeaway here.
Right.
Cool. So I think the last topic we touched on before we end this is, so personally speaking, I think we started off with, Web3 journeys when the first tokens exploded. Then you had NFTs that came in, that was the next big wave. And me and my friend were sitting one day, thinking out over this own point in the middle of COVID, and we were like, the next big thing is probably going to be DAOs. Unfortunately, I'm not seeing that. I haven't seen DAOs social yet, right? Probably still on the way. I'm still going on to that hope, but now I'm going to get your thoughts on this industry. What are your thoughts on sort of community-driven governance, basically the kind of model that DAOs vouch for, right? And what is its significance in the DeFi space? I know that we're running out of time, so we can keep it brief, and then we're probably going to close on that now.
Yeah. So even I was having the same conversation during COVID with one of my friends, and we were thinking of starting a DAO starter kind of thing where protocols can come and start their own DAOs, transparent. But the thing is, things are changing now. But if you talk about from 18 till 22 era, DAOs were not transparent. So DAOs are working based on the tokens of particular entity is holding, and most of the tokens were held by the particular protocol itself. So things were not that transparent, but things are changing now. There has been transparency is increasing if we talk about 23, and I think things will improve. DAOs are going to play a major role in the whole ecosystem, and I believe DAOs are something which will make it a truly decentralized part. So like I was telling about front end being changed, back end being changed, I think DAOs will control that. So they will play a major role in the future.
Yeah, I think you pretty much covered it. I think DAOs are a really good way of finding out what your audience really want, because as a company, there's only so much really gauge, and that's what it really helps with as well. And like you said, the majority of the company owning the state, I don't necessarily think that that's an issue, because they get still the right is they are the owners of the tokens, and I think it's I do think it's a very good way of being able to track what your community actually want. Sometimes I do wonder with DAOs that there can be a conflict of interest. So whether members and token holders of the DAO are still looking for a short-term gain, perhaps with a new token launch or otherwise, rather than looking into the long-term benefits of the money. And that's one of my concerns with the DAOs as well, which is kind of why I think it's good to have large stakeholders in the ecosystems. But in general, I think it is a very...
But it's a good way to think the bad points you both just brought up, because in a sense, you do because of great like a high earning centralized one. Let us say that please don't take it, so what if it's every day is centralized. Technically anything can be centralized. We can have it with our company which is being run by a DAO. A DAO is a DAO is setting its fourth seed. A DAO dedicated, a DAO dedicated an idea that is established to sort of further with the vision, right? So the DAO mechanics, especially not the manually, especially because and in that DAO is standardized by the tokens and the value that is so from forth. for community members and the viability that they might have that stored. Those are things that it keeps us in the worked out. But I think going forward, a lot of protocols say a lot of the companies, like example, one of them are the coming games that we work with, Scroll. It has Scroll Foundation and artists about for Sport, Twitter, the film model. It has something about the film foundations you have. So these are the reason why you have a foundation which are running. Ethereum has the Ethereum Foundation, not Vitalik is running the Ethereum company. Right? This is an reason why, because the DAO wasn't running the affected yet. And a foundation monolith style is running these systems, it is adding faster than this gets for now. So going forward, you might see more and more as is made, you've got it's continuing processes that get more and more decentralized. DAOs start happening more and more into the picture, and thereby contributing to the growth of DeFi itself. I think that's what I'm taking away from what Schwartz said. You got how DAOs itself, and this sort of governance and decentralized governance models that's going to impact even decentralized finance. Yeah.
Yep.
So I think on that note, I'm going to go over just one last question is, do you have, especially for folks who are going to be filling in with DeFi today, if you've got any suggestions, any pitfalls that they should watch out for, any challenges that they be foreseeing, let's say this year, the next year, and as the next 2 years, let's say the next quarter, what was they keeping in mind when they're building? And we're going to go over that and what.
Sure. So I would like to keep it to basics itself. So Web3, many people consider it's like Solidity or Rust or Solana. It's difficult. Web3 is not difficult. It's just a change of mindset. That's it. So just change your mindset. Languages are not difficult. Just start with it. You will get to learn it. So that's the only tip from my end.
Yeah, well, one thing that I think is really important to be mindful of, especially when we're really new to business, is regulation, which we kind of touched upon. But there's been so many features that I wanted to implement into my platform. I sort of started the process, writing down rules, that sort of thing, to find out it's just not possible in many users around the world. So part of my recommendation is to not waste time on that and to ensure that your regulatory points are very clear, whether that be your token, whether that be your smart contract, or your organization in general. It's really important to make sure you're following regulations. And also, the company you're operating in, whether that be a custodian, an exchange, or whatever other digital entity you're doing.
All right, and on that note, you may have any of the DeFi Panel. Thanks so much, Shiva. Thanks so much, everyone, for being up. And for signing in, thank you,